Friday, November 12th, 2021, Monaco 64, home of alternative economics and contrarian views. So I have checked, it is Friday. Yesterday, I said it was Wednesday. I got the date right, but I got the day of the week wrong. I apologize. Today, I want to look at something that most of you already know, but I still get questions about it. Probably because when you get new viewers every day, some of them won't have seen all my videos, of course, or have been aware of what I've been trying to tell people about. So we're going to look at why having physical gold and silver, or just physical silver, if you can't afford gold, is so important. And there are many reasons why, in my opinion, and also in the opinion of many others in the precious metal space, why you should do so. And I would say the most important reason for having a little bit of physical silver or physical gold, be it in coins, bars, whatever. And you need to do your homework about what's the best kind of coins and bars to have in your own country, even though gold and silver are the same everywhere. I'm sure you could go anywhere around the world and they would accept gold and silver, even if it wasn't a piece of coin or bar from that country. The U.S. Air Force, for example, and Special Forces, I think they give their pilots a little box with sovereigns, gold sovereigns from the UK, because those coins are recognized the world over. So if they get shot down, for example, in enemy territory, they'll have those coins. They'll be able to survive. And that's why it's so important to have physical gold and silver. Someone asked me yesterday why you're so much against GLD or IAU. I'm not sure which ETF that is. I could care less for ETFs. Well, because GLD, for example, is not really gold. If you look at the prospectus, and also SLV, you look at the prospectus, they can change the rules because of a crisis. They call it force majeure. The other thing is the minimum amount of shares that you need to redeem your gold with GLD is 100,000. And the other reason why I think it's very important why you hold physical gold and silver is that the ETFs are a creation of the bankers. They're doing the same thing to cryptocurrencies. They're getting on the bandwagon and they're creating ETFs. I saw the head of Santander Bank, biggest Spanish bank, and it's a big bank in the UK. She came out the other day and said, oh, the next big thing is crypto. But do you really think financial advisors, bankers are going to teach the public how to actually get real Bitcoin or other altcoins? Do you think they're going to teach them to have their own private wallet? No, because there's no money in that for them. So they're going to lure retail investors into the cryptocurrency ETFs, and there will be no cryptocurrencies in those ETFs. It might provide the very wealthy maybe with a clause where they could ask for their Bitcoin or Ethereum or whatever to be sent to their private wallets. And it's the same thing with gold. They've hijacked that market. And some people might argue, well, but gold and silver started going up a lot about 15 years ago when these ETFs were created. Well, who knows? I would say maybe gold and silver would have gone up even more even if there weren't ETFs, because people would have gone out and bought physical gold and silver. The other thing about buying gold and silver is that you want to buy the real thing. That's what I did in 2002. Would I have bought ETFs if they were available in 2002? Definitely not, because I wanted to buy actual gold. And once you buy a gold coin or a silver coin or a silver bar and hold it in your hand, you realize how special, and yeah, you realize why it's been money for such a long time, for thousands of years. So yes, you don't want to have counterparty risk. That's the reason why gold and silver have to be held physically, in my opinion. And the other thing is, by buying bankers' paper products, you're actually helping them perpetuate the suppression or the control of the price in gold and silver. So the more people actually redeem, because that's what we're doing. We're not buying gold and silver. We're redeeming the paper currencies, the fiat currencies, for real money. Have you ever wondered why the paper money is called a promissory note? Yeah, because you could go to the bank prior to 1933, prior to 1914 here in the UK, 33 in the US. You could redeem your $20 bill for a $20 gold piece. So yes, you'd be redeeming, you would be extinguishing a debt from the system. You would also be making it harder for governments to deficit spend if you hold physical gold and silver. You see, FDR closed the banks when he took power in March of 33, because people were redeeming their fiat currencies, their paper promissory notes, for real money. And the banks were going to run out of real money, gold and silver. And that's why he also had to ban gold ownership, because the banking system had issued too many promissory notes without backing. And that's what they've been doing ever since. So before we look at the markets, let's reference a very important article that the congressman from Nebraska, Howard Buffett, yes, that's Warren Buffett's father, wrote in the Commercial and Financial Chronicle on May 6, 1948. It's entitled, "Human Freedom Rests on Gold Redeemable Money." I'm gonna just go through this first part here, and then another part of why it's so important to have physical gold. This is what Congressman Buffett said. Is there a connection between human freedom and a gold redeemable money? At first glance, it would seem that money belongs to the world of economics and human freedom to the political sphere. But when you recall that one of the first moves by Lenin, Mussolini, and Hitler was to outlaw individual ownership of gold, you begin to sense that there may be some connection between money redeemable in gold and the rare prize known as human liberty. So, and what's this got to do with ETFs and physical gold and silver? Well, the bankers are in charge, so they don't want you to have access to real money. Anyway, let's continue. Billy just jumped off. We've been out for a walk already. Billy and I, just before I continue, we have changed our modus operandi in the morning because he's not seeing well anymore. So I take him out first thing now. We have some breakfast, and then we come and do this report. We've been getting up a little earlier. Also, when you find that Lenin declared and demonstrated that a sure way to overturn the existing social order and bring about communism was by printing press paper money, Then again, you are impressed with the possibility of a relationship between gold-backed money and human freedom. In that case, then certainly you and I, as Americans, should know the connection. And I would add anyone really around the world, not just Americans. We must find it, even if money is a difficult and tricky subject. I suppose that if most people were asked for their views on money, the almost universal answer would be that they didn't have enough of it. In a free country, the monetary unit rests upon a fixed foundation of gold or gold and silver independent of the ruling politicians. Our dollar was that kind of money before 1933. Under that system, paper currency is redeemable for a certain weight of gold at the free option and choice of the holder of paper money. Free option and choice. There you go. And I wouldn't have learned all this if I hadn't bought my first gold coin in 2002. And why do I say that? Well, because holding that first Krugerrand and showing it to my colleagues at work, and they went out, some of them went out to buy some gold, not all of them, but it led me to look into gold and money, and I wouldn't have found Mr. Buffett's article. So that's how I learned about it. But you buy a GLD or whatever other ETF, you don't care because it's just something on your brokerage statement on the screen. But if you buy real gold, it's different. I just want to go through another part of this article because nowadays with all the deficit spending, all the infrastructure, all the inflation, not just in the US but everywhere else, this is why physical gold and silver are so important and why you need to have as much as you can outside the system in physical form. This is what he says. There is only one way that these spending pressures can be halted. That's government spending. And that is to restore the final decision on public spending to the producers of the nation. Not the bankers, not the central banks. The producers of wealth, taxpayers, must regain their right to obtain gold in exchange for the fruits of their labor. This restoration would give the people the final say-so on governmental spending and would enable wealth producers to control the issuance of paper money and bonds. So when he wrote this, of course, Americans couldn't own gold. But now Americans can, and people all around the world can. So it's no excuse. We need to keep stacking, keep increasing our weight, as Mike from Rethinking the Dollar would say. So that's why it's so important to have physical gold and silver, because ETFs are just a distraction that the bankers and politicians want you to get involved in, because it doesn't really entail having real gold and silver, and it won't entail having also real Bitcoin or Ethereum. It's just another scam from the bankers. So beware out there, people who are thinking of getting into cryptocurrency ETFs. With that, let's quickly look at where the markets are this morning. It's 8:15 a.m. London time. We've got spot gold at 1855. It's down about just under $7. Range has been 1863.50 to 1854. So we're right near the lows here. Silver is down 16 cents at 25.07. Range has been 25.29 to 25.05. Yes, I think gold and silver have broken out, not just in dollars, but in all other major currencies. Short-term moves, hourly moves, daily moves, and even weekly moves sometimes are not that important. I think the longer term picture looks good, and as I've said many times, there's no way that the central bankers can stop inflating. The Dow future is up 40. The NASDAQ 100 future is up 40 as well. S&P is up 5. The FTSE is down 18 points at 73.67. To the fiat currencies, sterling, yeah, picture is looking pretty bleak for sterling, even though it's up a little bit overnight. It's at 133.82. It's up about 0.1%. The euro is unchanged, 114.44. The dollar is unchanged versus the yen at 114.04. Dollar is down slightly versus the yuan. It's at 638.70. And I noticed yesterday it was trading at 640. So from yesterday, it's down a little more. To the other currencies, we've got Aussie dollar up 0.1% at 73.01. The dollar is unchanged versus the Canadian dollar at 125.80, and the Kiwi dollar is unchanged as well at 70.24. So fairly quiet, the Forex market. To the commodities, WTI crude is down 0.5%, just above 80. High-grade copper is down 0.2% at 438.50. Natural gas is down 1% at 514. There was a headline about the president of Belarus threatening to cut the flow of natural gas through Belarus. I think a quarter of the natural gas that comes from Russia to Western Europe goes through Belarus. They've been having problems with migrants at the border or refugees, and the EU is threatening to sanction Belarus. So the president there said, well, if you put sanctions on us, we're going to cut the gas. But how significant is that threat? I read through it a little bit through an article in the FT, and Mr. Lukashenko, that's his name, the president, he's really under the control of Putin. And if Putin doesn't want that to happen, he won't let that happen. So yeah, there were headlines about that. I'm not sure it's that serious. I think he's just probably trying to negotiate. Anyway, let's finish off by looking at the bond market. So the 10-year yield right now is unchanged. It's around 1.57%. The Australian bond market, just wanted to have a look at that because a few weeks ago, yields there spiked. As you can see here by this chart, they've dropped back, but it looks like they're picking back up. So we need to keep an eye on this. This is the 10-year Aussie yield. So with that, I want to wish you all a great weekend, and I'll speak to you later. Take care. Bye.